Hi everyone. Today we are going to learn an important provision in the UAE VAT law. For any law, there is a point of time where the law is going to be implemented. In the case of UAE VAT, that is implemented from 1st January 2018. So, we have to learn a special rule that is called transitional provisions. I mean, when the contracts are signed for the year 2017 and if those are extending to the year 2018, it's very important to learn and it has got a very important impact on VAT. This is called transitional provisions. Under the UAE VAT Law number 8 of the Federal Law of UAE, under Article 80, the transitional provision is disclosed. Further to that, in the Article 70 of the Executive Regulation of VAT Law also describes what is the conditions to be fulfilled for in the case of transitional provisions. Before learning what is transitional provisions, it is important to learn the date of supply provisions. As per the Articles 25 and 26 of the Decree Law, the date of supply is mentioned. So, let us learn what is date of supply. In the case of supply of goods, normally the delivery of the material will be the date of supply. But in the VAT law, if the payment is done in advance or the sales invoice, that is a tax invoice, is generated early before the actual delivery of the material. In the case of delivery of materials, whichever event is happening the first will be tax point. That is actual delivery of material or the receipt of payment or the date of the tax invoice made. Whichever happens first will be the tax point. Let us learn these provisions based on an example. Let us assume there is an order for 100,000 dirhams. We got the order in the month of January and the material has to be delivered in the month of April. The terms of payment is 25% advance on confirmation of the order and the balance 75% will be paid at the time of delivery. So, the 25% of the 100,000, that is 25,000 will be due for tax in the month of January itself. And the balance 75,000 will be taxable in the month of April. So, this is the date of supply rule applicable for one-time supply. In the case of continuous supply also, the same kind of provision will be applicable. Whichever happens earlier rules, that is the actual performance of the service or when the payment is received or the date on which VAT invoice is made, whichever comes earlier. So, in the case of continuous service also, similar rule will be applicable. This we will learn with an example. An order is there for 1 million. It has to be executed within a period of 3 or 4 months. The terms of payment is 10% advance on 1 million, that is due in January. Then 20% of the work is going to be completed in the month of February. The balance 50% will be completed in March and the final 30% will be done in the month of April. Here also the tax will be due in the month of January to the extent of the advances collected. The balance 20% will be due in the month of February and the proportionate amount where we collected advance will be deducted from that one and the balance will be taxed. That means 200,000 less 20,000, balance 180,000. For that the tax will be collected, that is 9,000 dirhams. When we come to the next stage, that is March, 50% of the work is done. 500,000 is the invoice, but we have collected advance 50,000, that is 10% already. So the balance 450,000. tax will be applicable for that amount, that is 22,500. The final bill, that is 300,000, that is the 30% less advance tax, 270,000. For that, tax will be applicable 5%, 13,500. See, in this example, advance is collected, at that time tax is paid. Subsequently, to what extent work is done, and from their progressive billing method, so the balance amount only will be taxable. Now, let us connect the date of supply with the transitional provisions. If the actual invoice, sometimes invoice is done in the month of December, or the payment is received in the month of December, but actual delivery of material or the installation of a machinery or such event is happening in the month of December, in the month of January or subsequently. That means payment is received in 2017, or invoice is done, tax invoice is done in the month of December itself, in the year 2017 itself, but actual supply is happening in the subsequent year. In such cases, to the extent of advances collected or to the extent of invoices made, that amount will be taxed in the month of January itself. The tax point will be, the date of tax will be 1st January 2018. Let us learn this provision also with an example. The same example, I am going to change the date. 100,000 is the order, and we are getting this order in the month of December 2017. Advance will be collected 25%. 25,000 will be collected in the month of December. But actual delivery is happening in the month of January. So, or February. So, in such case, to the extent 25,000 advance is collected will be taxable on 1st January 2018. And the balance 75,000 only will be taxable as and when it is supplied or when the invoice is generated. That is, in the case of 25,000, 1,250 will be taxed on 1/1/2018. The balance amount 3,750, that is the tax 5% of 75,000 will be taxed in the month of February. That is the impact of the transition provisions in the VAT law. Now let us understand how the transition provision will be applicable for a continuous supply. Assume the same example which I mentioned earlier, continuous supply. 1 million is the project value. And we are going to start this project in the year 2017. October, the 10% advance is collected. That is 100,000 advance is collected. No tax. 20% of the work is done in the month of December itself, December 2017. No tax. But the balance project is done, that is the 80% of the project is done in the year 2018. Let us assume in the month of March, 50% of the work is done. 500,000 will be the amount invoiced. For that, advance collected is 50,000, that is 10% advance. Still, the tax will be applicable for entire 500,000. Next, in the month of September, we are going to do the work 30% and invoicing. At that time, for 300,000, tax will be applicable. That means, in the case of transition provisions, for the advance what we collected in 2017 will be taxed as and when actual supply is happening in the year 2018. So, for the entire amount 1 million, 20% is not taxed in the year 2017, but the balance 800,000 will be taxed as and when the actual supply is happening. So, 25,000 will be the tax amount in the month of March, and 15,000 will be taxed in the month of September. This is the impact of transition provisions on advance collected in the case of continuous supplies. So far, we were discussing about how the date of supply is connected in the case of transition rules. Now, let us learn the other part of transition rules, that is, how the tax element will be applicable if the VAT clause is not mentioned in the contract. For example, sometimes in the contract, which is signed in the year 2017 might not have mentioned anything about the impact of anything about how VAT will be applicable on such contracts. If the contract is silent on VAT, it is assumed or it has to be considered that the contract value is inclusive of VAT. That means, in case if the contract is signed for 100,000, if VAT clause is silent, this is inclusive of VAT. So the exact amount of the contract will be 95,000 plus, and the 5% tax will be there over and above. So total value cannot exceed 100,000. There is an additional clause in transitional provision related to the contracts. Though the contract is silent on VAT clause, the supplier has the right to intimate the customer about the applicability of 5% VAT on the contract. The supplier can write through an email or through any mail or intimate the customer in writing that there will be a provision of 5% tax on the contract value. Then, if the customer is not responding to that such communication to the supplier within 20 days, within 20 working days, then the supplier has to assume that the customer has accepted such intimation and the supplier has the right to charge VAT over and above the contract value, which exactly what he is going to do, going to execute in the year 2018. But sometimes the customer might not have registered. Sometimes the customer might not have the right to take the input credit because of exempted supply, for example. In such a case, the customer has the right to intimate the supplier that he is not registered, or to the extent, so to what extent he is not able to take the input credit of such supply because of exempted supply or any other reason. In such cases, the supplier cannot charge 5% VAT over and above the contract value. In such cases, it will be considered as inclusive of tax. To conclude, the transition provision is very important clause in the case of VAT law as well. Many contracts signed in 2017, extending to 2018. So we learned how VAT law will be applicable in such cases. For the advances, those we collected in December 31st will be taxed in subsequent year, or though we invoiced in 2017 December, but actual delivery is happening or execution of the work is happening in that subsequent year, that is 2018, tax has to be paid on such amount. By considering all these provisions related to date of supply and the contract value, which is to be considered in the transition provisions, hope everybody can handle their existing contracts with mutually agreed with your customers. So everything is, I believe this is clear for every one of you.